The spring market's in full swing, but there is signs that it does not mean that big price increases are coming. I'm Darcy Toombs, real estate broker and team leader with Toombs Team Real Estate Group at Coldwell Banker, the Real Estate Center. And here's what you need to know about what happened in Newmarket real estate in February 2024. All right, let's get into it. Inventory is creeping up. Active listings at the end of February rose to 156 from 129 at the end of January. And at the time of filming, which is March 7th, the current active listing count sits at around 170. So as you can see, we are still slowly seeing increase in inventory. We are expecting new listings to be slow during the March break period, but come out fast and furious the last 2 weeks of the month. The average active listing count over the past 10 years at the end of February has been 154, and at the end of March, 199. Now, historically speaking, inventory can be expected to peak in May and June, when the 10-year average number of active listings has sat around 250. I would not be surprised to see an active listing count higher than that by the end of June this year, though. For some important historical reference, the highest inventory count that Newmarket has seen in the past 13 years was 531 active listings in May of 2018. This was right after the 2017 foreign buyers tax correction, which resulted in a 35% drop in the average price over an 18-month period. The average price in May 2018, when inventory was at its highest, was $739,239. Now, I'm not saying I expect prices to fall back to that level. There's just way too much demand today for that much of a swing, but I am using it as an example to show how far prices can swing when the supply heavily outweighs the demand. The months of inventory was 5.42 that month as well, which is significantly higher than today. Now, there was 86 sales in February, bringing the annual sales count to 153 at the end of February, which also had an extra day this year. This was up by 34% from the same period last year, but still well below the average over the past 10 years, which has been 184 sales by the end of the second month. At the time of filming, we have seen another 15 sales in March. However, the pace is well below the 10-year average for sales in the month, which has been 167, which is also actually the highest monthly sales volume for the past 10 years. The community of Stonehaven Wyndham had the most sales in the month with 17, with the communities of Bristol London Road, Huron Heights Leslie Valley, and Woodland Hill each having 11 sales in February. The average price of the 86 sales was $1,235,545. This is impressive, as it is the highest average sale price dating back to August. In fact, it's the fourth highest average monthly sales price dating back to April 2022, which was shortly after the market cycle peaked in February of that year. The median price for the month was $1,185,000, which was the highest we've seen since May of last year. We saw 36 sales reported either at or above the asking price, representing nearly 42% of all sales. Bidding wars were back in February, as there were many listings set up with asking prices well below their intended sale price. In fact, there were 17 that went for more than 110% of the asking price. So buyers beware that the list price isn't always a good indicator of what the property will sell for. If you're a buyer out there right now, it's best to be working with an agent who knows the ins and outs of the area that you're looking at to help you better understand what a home will likely sell for before getting your hopes up. Also, it's not uncommon to see a list price get increased if the offer date was unsuccessful at achieving an offer price that was acceptable to the seller. This is one of our ultimate pet peeves, as it wastes so much time for everyone involved: the seller, the buyer, the agent, everyone. So in February, there were 4 notable sales that I really think are worth mentioning. The first one was 514 Melbourne Crescent. It had the highest percentage of asking, selling for 131% of the $799 asking price. This one was certainly set up for multiple offers, and no doubt they received plenty, as bungalows are hot commodities and appealing to all buyer demographics, as well as the price would entice a huge number of showings. The next one, 960 Lockwood Circle in Stonehaven. It had the highest selling price, fetching $2,260,000 for a somewhat dated home on a beautiful lot that featured one of only a handful of indoor pools in Newmarket. No doubt this house has a ton of potential to be something very special, but it's going to take a pretty big budget to get there. The next, I would say, is 562 Clifford Perry. Now this home was actually listed 6 times since January of last year, selling for $200,000 less than the first listed price. They had decided to play the listing low game and priced it at $1.5 million and ended up achieving a sale price of $1.67 million. Now certainly this looked like a nice home on a really decent lot, so I'm not overly surprised to see the sale price, but I would say it would be quite frustrating to be the sellers as well as any of the buyers that played along for that whole process of this home being listed on the market. And finally, I'd say 468 Ontario Street. This was a fixer-upper that was damaged by fire and essentially sold for lot value at $417,500. Previously, this was listed as part of a development project for $2.4 million that included 2 other properties as well. But I could probably argue that the lot value could have been higher, as the dimensions of the property were 59 feet by 202 feet. But it's kind of in an area that's close to the GO train line. It would be a little less desirable for some high-end builders or those with means to build a really nice custom home. Now, I should mention that there were only 3 condo apartment sales in the month. This is a little concerning, as there were 17 available for sale at the end of the month and 19 available at the time of filming. Condos are not moving at the same clip as the freehold market right now. Now, I am still projecting inventory to increase a lot from where we are today. I would not be surprised to see the active listing count greater than 200 in Newmarket by the end of March and as high as 300 by July, when I expect the numbers of active listings to peak. Inventory is not selling fast enough to be burnt off, largely because there is a substantial amount of stubborn homeowners that won't sell unless they get their price. The homeowners will be competing with new listings that will be coming onto the market and will be positioning themselves to be much more attractive than the current stock of homes for sale. This is likely going to mean we could see a slight downward movement on prices, but based on the amount of action we've seen from our own listings and properties that we've worked on for some of our buyer clients, we can tell that there is still a lot of demand for housing, so we are not predicting any sort of crash in the near term. Homes that are priced well are selling quickly and for a lot of money. Interest rates are of course going to be a factor, and we are still projecting that we could start to see quarter-point drops to the overnight rate by the Bank of Canada starting in July, which may then turbocharge buyer demand and start to burn off inventory much quicker. I would not be surprised to see the Bank of Canada lower rates by quarter points each quarter, settling the rate around 4% next summer and holding it there for a while. Of course, I'm not an economist, but this has been what some of the real estate economists have been saying. This will likely mean that price gains will be stagnant for the next few quarters. So in summary, the market certainly started off much stronger this year than last, but there's still some lag as some homeowners struggle with the new reality of slightly lower prices than from the days of the peak. As inventory grows, and it is growing, the supply-demand curves will adjust, causing prices to settle. However, we are still in what we consider a seller's market right now, as the months of inventory is the lowest it's been in 8 months. Now, just a reminder of what months of inventory is, it just means how long the number of sales that happen in a month would take to burn off the existing inventory. So if there was 2 active listings at the end of the month and there was only 1 sale, 2 over 1 means it would take 2 months to sell. Another interesting data point we like to watch is the number of vacant homes. At the time of this filming, there were 71 active listings that are listed as being vacant. This represents roughly 40% of all active listings right now. Now, of these, there is a large number of assignment sales, which are homes that were bought in pre-construction, and the buyers are trying to sell them before they have to take possession of them. So of course they're vacant. They don't even live in them yet. As you can tell, I'm not a big fan of assignment sales. Now, we're keeping an eye on the number of active listings. It's really gonna be what determines if we're gonna see home prices increase or if we're gonna see a slight market adjustment like we did throughout 2018. Now, if you have any questions about the information provided in this video, don't hesitate to reach out. Either myself or a member of our team would be happy to discuss it with you about what's going on and how it might affect you. And if you're a homeowner and you want to get an idea on how much your home might be worth in today's market, we'd love to have a talk and provide you with a complimentary and honest home evaluation to give you a realistic idea on what your home may be worth, so you can get a better handle on how to strategize your next move. Go to toombs.team/value for more information. We'll see you next month.